Okay, so you dive into these advanced trading tools and it just feels overwhelming, right? Like information overload. Where do you even start?
Exactly. It's like being given this incredibly powerful machine, but the manual's maybe a bit dense. Finding the practical path is tough.
And that's why we're here. You've brought the user Bible for the Liqbot Pro V4.5. It's focused specifically on trading liquidations. This is your research, basically laid out for us.
Yeah, it's a really detailed source.
So our mission today is to really dig into this, pull out the absolute must-knows, and give you listening a shortcut to understanding this thing from just getting it set up to the really smart features.
Think of it as a guided tour through the manual. It covers, well, pretty much everything basics, AI, risk.
Yeah.
It's all in there.
I've been looking through it, and honestly, some of the concepts, especially around the AI and how it adapts,
Yeah.
pretty impressive stuff. I'm keen to unpack that.
It's definitely got depth, so maybe let's start right at the beginning, getting things connected.
Makes sense. First hurdle, that's setup. The user Bible's pretty clear. You need a BitGet account.
That's right. The bot's designed to work directly with Bitget's futures platform. That's where the trades happen.
So step one is that BitGet account. The guide mentions email sign-up, strong password, the usual. Maybe an invitation code like BGMetaQuant 2024 seems standard.
Registration itself is straightforward, but what the source really emphasizes, and I mean, this is critical, is the security setup.
Yeah, that section jumps out. It really hammers on setting up two-factor authentication, 2FA. You need an authenticator app like Google Authenticator or Authy.
Right. Scan the QR code, enter the code from the app, and this is key, save those backup codes somewhere safe, offline.
And it lists other things too, SMS, verification, setting an anti-phishing code, maybe a withdrawal whitelist, login notifications as well.
Oh, exactly. A whole suite of layers.
So why is security so stressed here? I mean, beyond the obvious account protection.
Well, think about it. You're giving this bot API keys. Those keys let it trade with your money on the exchange.
Ah, right. Access keys.
If someone gets those keys, they could potentially drain your account. So 2FA, IP whitelisting for the API keys on Bitget's side. These things protect that connection. It's absolutely vital.
Okay, that makes total sense. Protect the keys, protect the funds. After security, it's account verification, KYC.
Yep. Know your customer. The source lays out two levels. Level 1 is the basic ID check, passport, driver's license.
Needs to be a clear photo, all corners visible, right?
Exactly. Good lighting. That usually gets processed in, say, 24 to 48 hours. It bumps up your withdrawal limits.
And level 2, that needs proof of address.
Right, like a utility bill or bank statement, less than 3 months old. Takes a bit longer, maybe 3 to 5 days, but that unlocks higher limits. All the features.
The guide even mentions common issues like blurry photos and tells you to ping support if it's taking too long. Handy.
Yeah, anticipates those little frustrations.
And before you even launch the bot software itself, there are a couple of quick technical checks mentioned. Python version needs to be 3.8 or higher, sometimes specifically 3.11.
Yeah, just checking Python version in your terminal. Simple check.
And if you're missing some software components, dependencies, the fix mentioned is pip install force reinstall dasher requirements.txt.
Standard stuff for Python software, really. The guide just gives you the command so you can get past it quickly if it pops up.
Okay. And one last Bitget thing, enabling futures trading on their platform. Reading agreements, answering questions.
Right, that's an exchange requirement for anyone trading futures. Standard procedure.
So accounts secure, verified, local tech is sorted. Now we can actually look at the bot's interface.
Right, into the dashboard. The user Bible calls it the command center, your main overview screen.
Yeah, what do we see there?
A few key panels or cards, your account balance, total funds, available, used margin, completed trades card, showing your daily results, win rate, P&L.
You can see open positions too, right? And recent trades.
Yeah.
Even recent liquidations happening in the market.
Yeah, exactly. It's all there at a glance. Like that fighter jet cockpit you mentioned earlier, designed for quick status checks.
And those big start-stop buttons are prominent, with colors, green for running.
Green for running or ready, yeah.
Yeah.
Orange when it's starting up, red if there's an error, and blue means you still have open trades even if the bot itself is stopped. The guide stresses using that stop button for a clean shutdown.
Okay. From the dashboard, where do we configure the actual trading?
That would be the Instruments tab. This is where you tell the bot what to trade and how to trade it.
You can just toggle instruments on or off easily.
Yep, quick controls for that. And a really important point from the source, especially for demo mode, only BTC USDT, ETHUSDT, and XRP USDT are available in demo.
Good to know. Saves confusion when you're just testing.
Definitely.
Adding new ones seems simple too. Click Add, type the symbol like DOGUSDT, make sure it ends in USDT, and the bot checks if it's valid on Bidget.
Right. It won't let you add something like BTC USD or a random coin it can't trade.
Now, the core settings per instrument, the trading parameters, this feels important. Let's start with base size. What's that all about?
So base size is your default position size. Before any of the fancy dynamic adjustments kick in, this is the starting amount for each trade. It's fundamental for your initial risk per trade.
The guide gives examples, right? Like for Bitcoin, maybe 0.001 BTC conservative, 0.0002 moderate.
Exactly. And it gives a rule of thumb, try risking maybe 0.5% to 2% of your total account capital per trade. It even shows how to calculate a starting base size based on that.
Account size times risk percentage divided by price. Makes sense.
And you need to be aware of Bidget's minimum order size for that pair too. Getting the base size right is really step one for managing your money properly.
Okay, then there's take profit percentage, TP%. Setting your profit target.
Yeah, pretty straightforward concept. Price moves in your favor by this percentage. The bot closes the trade, locks in the profit. The source suggests ranges like 0.40, 0.8% for conservative, maybe 1.5, 3.0% for aggressive.
So why the different ranges? Is it about win rate versus profit size?
That's exactly it. It's a strategic choice.
Mm-hmm.
Tighter TP might mean more wins, but smaller ones. Wider TP, maybe fewer wins, but potentially bigger gains. When you do win, you tune it to your goal.
And the flip side, stop loss percentage, SL%, your maximum acceptable loss.
Absolutely non-negotiable. If the trade goes against you by this much, the bot cuts it, prevents big losses. This is your safety net.
The guide suggests ranges here too, like 0.3, 0.8% conservative, up to maybe 1.0, 2.5% aggressive.
Yeah. Setting a realistic stop loss is just critical risk management. Can't stress that enough.
Last one here is holding time, in minutes. Why limit how long a trade stays open?
Good question. It basically prevents your capital getting stuck in a trade that's just going sideways, not hitting profit or stop loss. Forces a decision after a certain time. It's a time-based risk control.
The examples are like 5-15 minutes for scalping, maybe hours or even a day for longer-term strategies.
Right. Keeps capital flowing, stops it getting locked up indefinitely.
Okay, so those are the core parameters for how it manages a trade once it's open. But the really clever part seems to be how it decides when to get in and how much to risk dynamically. The brains, you know.
Right. That brings us to the MQ score and the dynamic sizing system. This is the core logic.
Let's break down the MQ market quality score. The source says it's proprietary. What's it actually measuring?
It's trying to figure out how good a trading opportunity a specific liquidation event actually represents. See, not all liquidations are created equal. Some offer a better chance for a profitable fade trading the expected bounce than others. The MQ score quantifies that potential.
The components listed sound pretty technical. Impact empirique, volume profile, momentum bias, OI pressure. What do these mean in simple terms?
Think of them as sensors checking different things around the liquidation. Like, impact empirique is maybe how much that liquidation itself moved the price. Volume profile looks at activity at that price level. Momentum checks the trend. OI pressure, that's open interest or lots of people caught offside. Volatility checks how choppy the market is. Microstructure looks at the order book.
Okay, so it's looking at the whole picture.
Exactly.
Yeah.
And it weighs these factors, and importantly, it learns which combinations tend to predict a good fade trade.
So it calculates this score. How does the bot use it then?
It compares the score for each liquidation against the threshold you set for that instrument. If the score is higher than your threshold, then the bot considers taking the trade.
Ah, so the threshold is like the bouncer at the door. Only high-quality setups get in. The source mentions tuning this lower threshold means more trades, maybe lower quality.
Higher threshold means fewer trades, but hopefully higher probability ones.
Exactly. It's your main control for selectivity versus frequency. The guide suggests 0.5 to 0.7 might be a good starting range to explore. Okay, MQ score filters if it trades. Then how does it decide how much to trade? It's not always the base size, right?
Correct. That's where dynamic sizing comes in. It adjusts the position size for each specific trade based on the context of that liquidation event.
Why do that? Why not just stick with the base size?
Well, the idea is to be smarter about risk. The source says it helps maximize potential profit on really strong setups, control risk better when things look uncertain, it's data-driven, and automates a decision that's tough to make manually in real time.
Makes sense. What factors does it look at to calculate that size?
It considers the size of liquidation itself, the dollar value, also current market volatility, your settings for that specific symbol, how that symbol has performed historically, and general market conditions.
So it's a more nuanced calculation. How do you configure this dynamic part?
You set liquidation thresholds. Basically, you categorize liquidations by size. The guide gives examples for Bitcoin. Maybe under $10 is small, 100K is medium, $500 is large, maybe even a whale category. These values would be different for other coins, of course.
And then you attach size multipliers to these categories.
Exactly. Parameters like small size multiplier, medium size multiplier, etc. These multiply your base size. So a multiplier of 1.0 means no change from base size. But if your medium size multiplier is 1.2 and a medium size liquidation with a good MQ score comes along, the bot might take a trade 20% larger than your base size.
So if my BTC base size is 0.001 and a large liquidation triggers a trade with a multiplier of 1.5, the trade size becomes 0.0015 BTC.
Precisely. It scales your bet up or down based on the perceived opportunity size and quality. The course also mentions take-profit multipliers that can do something similar for the TP%, maybe allowing wider targets for bigger liquidations. Often, defaults are like 1.0, 1.2, 1.5.
And there's a critical safety net mentioned,
Right.
the max size limit per instrument.
Yes. Super important. No matter what the dynamic calculation says, the position size will never go above this absolute maximum you set. The guide strongly advises setting this based on your account size, maybe capping any single trade at 5% or 10% of your capital for smaller accounts. It's the ultimate fail-safe.
Okay, MQ score filters, dynamic sizing adjust, all within the max size limit. That's pretty sophisticated. But then the source talks about the bot learning, getting better automatically.
That's the auto-learning money management ALMM system. It's an AI layer that watches how your bot is doing and tweaks its settings over time.
An AI changing my settings. Wow, okay. What exactly does it optimize?
The user Bible says it can adjust things like your TP%, NSL%, the dynamic sizing multipliers, maybe even the holding time or max size. It does this based on performance metrics, win rate, profit factor, drawdown, things like that.
How often does it do this? Is it constantly changing things?
It analyzes recent performance, usually the last 50 to 100 trades for an instrument, and the source says it can make small adjustments automatically, maybe every 10 or 15 minutes.
Can you see what it's doing? Keep track.
Yeah, there's an ALMM section on the dashboard for an overview, and the logs show the specific changes it makes, so you have visibility.
It mentions some advanced AI techniques behind it. Upper confidence bound, Bayesian optimization, ensemble learning. Can you give us the simple version of why these are good for this?
Okay, think of upper confidence bound as helping it balance trying new settings, exploring, with sticking to what's already working, exploiting. It tries things out smartly. Bayesian optimization is like it builds a map of how settings affect results and uses that map to find the best spots faster than just random guessing. Ensemble learning means it's probably using multiple different analysis methods together, making the overall decision more robust. It's basically a smart, data-driven way to fine-tune.
So it's like it's constantly experimenting to find the sweet spot for my trading.
That's the idea. The benefits highlighted are faster optimization, smarter exploration, and adapting to changing markets.
And it connects to risk management, too.
Yes, features like drawdown-based scaling, where it might automatically reduce trade sizes if your account takes a hit, or consecutive loss protection, which can pause trading after losing streak. These are automated safety measures tied into the learning system.
Adds another layer of protection. What are the best practices for using ALMM, according to the guide?
Definitely test it in demo mode first. When live, start with a low learning rate, maybe 5%, so changes are gradual. Maybe only turn it on for one instrument at first. The key is slow introduction and always keeping an eye on why it's making changes. Understand the process.
The source mentions potential performance boosts, like 10-30% better risk-adjusted returns. That's significant.
It shows the potential value, if used correctly, yeah.
Okay, so core logic, dynamic sizing, self-learning. But the user Bible also talks about AI systems that feel more like partners.
That's a good way to put it. There's the AI assistant, using GPT-4, and the AI co-pilot. They offer different kinds of help.
Let's start with the assistant. It's like a chat bot inside the bot.
Exactly. Interactive Q&A. Ask it questions, get guidance.
What kinds of questions?
Pretty much anything related to the bot based on the source. Configuration help, like how do I set the stop loss for ETH's DT, strategy questions, technical troubleshooting, like why isn't my bot trading? Even market analysis questions.
It mentions voice commands too, text to speech.
Yeah, some accessibility features there.
Yeah.
But the really powerful part is what the source calls its contextual intelligence.
Meaning it knows my specific setup.
Precisely. It doesn't just give generic textbook answers. It can look at your current configuration, your recent performance, your logs, and the live market. The example given is great. You ask, why is my win rate low? And it's my ever. And it might look at your settings and say, your MQ threshold is set to 0.2, which is very low. Try increasing it to 0.5 to filter for better quality trades.
Wow, okay. That's genuinely useful, personalized advice. And it can explain things too.
Yeah, you can ask it things like, explain liquidation trading simply. It acts as an embedded teacher.
So the assistant is your interactive helper. What about the AI copilot? How's that different?
The copilot is more autonomous. It runs 24/7 in the background, analyzing the market and your bot's activity, and it proactively gives you insights.
What's it watching?
According to the source, things like liquidation flows, shifts in market sentiment, potential arbitrage, large whale trades, maybe even news or social media buzz.
And what does it tell you? What's the output?
Actionable insights. The examples are things like a market insight alert. Unusual cluster of short liquidations on ETHUSD detected. Suggests potential upward pressure. Consider increasing ETH position size or favoring long fades. Or maybe a risk alert. Bitcoin funding rate extremely negative. Suggests short squeeze potential. Recommend reducing short exposure or favoring long fades.
So it's giving you strategic hints based on what it's seeing.
That's the goal. It uses pattern recognition, generates alerts about risks or opportunities.
And like ALMM, it uses multiple models and learns to personalize its suggestions for you over time.
Yep, Ensemble AI and adaptive learning are mentioned again, tailoring insights to your style and results. These AIs really aim to elevate the experience beyond just automation.
Okay, beyond the core trading and AI smarts, the user Bible talks about tools for deeper analysis. Stuff you do before you trade or to refine your strategy.
Yeah, these are for the more analytical side, data-driven decision-making.
First up is the Hedge Strategy Analyzer. What's its job?
It helps you figure out which specific trading pairs like BTC USDT or SOL USDT have historically been the most profitable for trading those liquidation fades based on the data your bot has collected.
How does it know? Where does it get the data?
It analyzes the liquidation tracker.log file, which records all the liquidations the bot sees. The guide says you need a decent amount of data, at least 100 liquidations, but ideally 1,000 or more for reliable results.
And what does it show you?
It ranks the instruments based on fade trading performance metrics, win rate, profit factor, Sharpe ratio, total profit and loss. The source might show an example where, say, BTC USDT comes out on top for phase with a 72% win rate and a 2.3 profit factor.
So it tells you, based on your own data, where the best fade opportunities have been.
Exactly. And it can break it down further, like, are large liquidations more profitable than small ones? Does it work better in certain market conditions? You can export this analysis and use it to focus your capital or tweak settings on the instruments that actually perform best for this strategy.
Very cool. That feeds nicely into the backtest engine. Why is backtesting so important here?
Well, the User Bible really emphasizes this. Backtesting lets you try out your strategies and settings on historical data without risking real money. It's about validating your ideas, finding optimal parameters, building confidence, and comparing different approaches objectively. It reduces guesswork.
How does this backtester work?
You load historical liquidation data, usually from CSV files. Then you set up the simulation, your starting capital, which instruments to test, the trading parameters you want to evaluate, TP, SL, size, holding time.
The source mentions making it realistic is key, simulating things like slippage and latency.
Crucial point. Without accounting for those real-world costs and delays, backtest results can look way too good. Simulating slippage, getting a slightly different price, and latency, execution delay, makes the results much more trustworthy.
What results do you get out of it?
The standard performance report. Total return, annualized return, maximum drawdown, which is a key risk measure, Sharpe ratio for risk-adjusted return, profit factor, win rate, plus charts and a detailed log of every simulated trade.
And you can run advanced scenarios, stress tests against market crashes, Monte Carlo.
Exactly. Stress testing shows how your strategy holds up in extreme conditions. Monte Carlo simulation tests how robust your results are statistically. These really probe the strategy's resilience. The source also suggests a logical flow. Good backtest paper trade and demo limited live trading, full deployment, gradual and monitored.
So these tools help you build confidence and refine things based on data, not just gut feelings.
Absolutely. They shifted from speculation towards a more engineered approach.
Okay, we've covered a lot. Setup, interface, core logic, learning, AI partners, analysis tools. Let's wrap up with the day-to-day stuff. Keeping it running, monitoring, handling issues.
Right, the ongoing operational side. The User Bible offers good practical advice here.
Let's quickly touch on risk management again. It's woven through everything.
It has to be. The source reiterates the basics. Secure those API keys properly, permissions, IP whitelist. Use 2FA on the exchange, keep a close eye on drawdown, and respect those max size limits you set for each instrument. It's continuous vigilance.
And performance monitoring is tied closely to that.
Definitely. Beyond the live dashboard, the guide stresses tracking your key performance indicators, your KPIs. Things like win rate aiming for maybe 55–70%. Profit factor ideally above 1.3, maybe pushing for 1.5 or more. Sharp ratio aiming for 0.8 plus for decent risk-adjusted returns.
And watching that maximum drawdown like a hawk.
Crucial. Keeping it contained, maybe under 5 or 10%, depending on your tolerance. The source also mentions analyzing performance over time, maybe seeing how it does in different market types, and using automated daily reports.
And there's mention of future remote monitoring tools and notification systems, too.
Yeah, keeping you informed wherever you are is important for managing things proactively.
What about when things inevitably go wrong? Troubleshooting.
It happens. The User Bible is practical. It groups common issues, connection problems, trading glitches, performance dips, data issues.
And give specific examples, like bot not trading means check MQ threshold, balance, instrument status.
Exactly. Or an invalid API error points towards checking the key details, permissions, or IP whitelist again. High CPU usage might mean tweaking frequency settings or checking your hardware.
And the first step is always check the logs, right?
Almost always, yes. The Logs tab is your best friend for diagnostics. The guide also mentions self-help tools like a log analyzer and config validator, plus the usual support channels, FAQ, docs, community email.
And basic security hygiene, antivirus, VPN updates.
Foundational stuff.
Lastly, it mentions API access for custom development for the really advanced users.
Yeah, showing it can be extended if you have the technical skills.
Wow. Okay, we have really walked through this entire Liqbot Pro v4.5 user Bible. From setup, the dashboard, the MQ score, dynamic sizing, the ALMM learning system, the AI assistant and copilot, the FADE analyzer, backtesting, all the way to risk and troubleshooting.
It's a lot to take in, but understanding these pieces from the source material is really how you unlock the bot's potential, both for finding trades and, just as importantly, managing your risk.
And the big takeaway from the source seems to be that this isn't just a one-time setup. Optimization, learning from trades, it's an ongoing thing. So thinking about everything we've discussed, the settings, the AI feedback, the analysis tools, maybe ask yourself, what's the first thing you could focus on for continuous improvement? Could it be running the FADE analyzer on your data, trying out ALMM cautiously in demo, or just committing to review the Copilot insights each day? How can you start turning this information into action?
A tangible next step to think about.
Thank you for joining us on this depth dive into the Liqbot Pro v4.5 user Bible.